Um, okay. Good morning, traders. Trust we all are doing good. I'm Currency Geek, and welcome to my day 7 of the 100 Days of Tinker Analysis Challenge. Today NZD card caught my interest, and I'll be doing a full breakdown of it in this video. So let's get right into it. Um, Going into the charts on NZD card. Um, If we look left to get right, we can see current market price is at the previous area of structure on the weekly time frame. And also, if we look closely at price, we can see there is a W pattern formation. Yeah, wow. Sorry about that. I said if we look closely at price, we can see there is a W pattern formation. And I've been talking about M's and W pattern for a while. We do know how they tend to play out. Now, with that said, I'll just pick up my ray 2 and mark out this area of structure here and just tag it as um sell zone. Yes. So knowing that we have a W pattern on the weekly time frame and also a sell zone, my bias on NZD card would be to go short back to the neckline of the W pattern formed. So what I'll do next is switch my chart to a line chart and mark out this area of structure here, which is the wick. Which is the neckline to be precise. So this point here, as the neckline, this area here, because they both align well, so I can just pick it from that point. Then I can actually come back to a line chart and try to place it properly. Yes, that's nice. So I can actually tag this as neckline or target. Yes, now with these factors known, I can now go to the daily time frame, which is where I love to gather most of my trading confluence together. Now, to the daily time frame, zooming out my chart to get the what price is currently doing to be precise. So I can see on the daily time frame, price is also at this area of structure. And what did we have here? Rejection. And like I said, or like I always say, weeks equal to rejection. Once there is rejection, it means there is a tendency for price to reverse and move the other way around. So knowing this is a sell zone on the weekly time frame and also a sell zone on the daily time frame, I'll just pick up my box tool and mark out the sell zone properly. Yes, so the sell zone is marked out, and um yeah, we can all see it clearly. And also, if we look closely on the 1 hour on the daily time frame, this is also a W formation. One, two, three, and a move to the upside. Let me mark that out with the brush so we can all see it clearly. So it's a W formation also with an expected tendency to move back into the neckline. Now, so we see these patterns form over and over in the markets. Now, next thing I'll do is I would like to add my RSI on the chart to see if it's overbought, so it can actually add up the confluences to go short on NZD card. Now, on my RSI, we can see it's actually overbought. So this is serving as another confluence that there will be a possible fall in price back to the neckline, because when RSI tends to move, it tends to move overbought and back to oversold, oversold, back to overbought. Now, with these factors aligning or piling up, the sentiment made from the weekly time frame, which is to go short on NZD card, is much more or is building more confidence. Now, to the 4 hour time frame, most persons know I tend to look for divergences when I find overbought or oversold regions on the day time frame. Now, let's check if we can find a divergence on the 4 hour time frame. Now, There is a divergence on the 4 hour time frame, which is this area down to this area, and it's a bearish divergence, to be precise. A bearish divergence. Yes, we can see the divergence, how it's actually formed and how it has formed. So, and also if we look closely at price now, there is a head and shoulder pattern forming. Head and shoulder patterns, which is forming. So yes, there we go. Yes, so there is a possible formation for a head and shoulder pattern on the 4 hour time frame, which will actually, we know the rules, break down, retest the neckline, then project downward. Now, with all these factors piling up, we actually have more confidence. There's a head and shoulder, cell zone within a cell zone, W patterns, and divergences. These factors are actually piling up and giving us a heads up that okay, this is what price is likely to do. Now, going down to the last time frame, which is the 1 hour time frame, we can also see the head and shoulder pattern reflecting nicely on the 1 hour time frame. Now, um, somebody might watch this video and just go to their trading platform and take a sell. No, I won't do that immediately. I'll be watching price action on the 4 hour time frame. I would like to take this head and shoulders off. Then I'll be watching price action on the 4 hour time frame. Let me switch back to a line chart to actually pinpoint an area of structure. Yeah, okay, this is the last area of structure. Yeah, so I'll be watching price action at this area of structure. Yeah, okay, yes, so I'll be watching price action at that area of structure. Yeah, if this level breaks or tends to break, price tends to break it, I will look to short NZD card. But price still being a low above this level, I won't look to short NZD card. So my bias on NZD card is a short to the 0.85543 level. So that's what I look to do on NZD card. If this level breaks and the factors which are aligned will, there's a tendency it would actually break this level, then come back for a possible retest where my entry will be gotten, then I look to short down further to the target, which is the weekly target. So my sentiment on NZD card is a short. So I hope you actually got the approach towards which I used to actually break down price. Now, if you got sentiment or an idea in the on this pair to be precise, please drop it in the comment section and do please like and follow.